And looking at this chart, you guys, we've been talking about sector rotation and just kind of like where the money is starting to shift. We looked at staples, healthcare is kind of like in that same space here. And so I'm starting to look for potential setups here. I'm looking for some trades. I'm looking for some things to add in my portfolio, as is probably everybody else that does what we do, which is the top-down analysis and get into those sectors and find something in that space. And I know, and Coach Matt, you can scan through a couple of stocks here for me. We'll start with what we had on our scouting report this week, which was Lilly. So we had that on the scouting report this week as a potential play. I liked where it was high basing above the moving averages. That was cleaning up really nice. We did get a little bit of choppiness yesterday, but overall, nice, clean chart. We got earnings way out there, so we got time for something like Lilly. Run through a couple of other ones for me here. Give me ABBV.
Yeah. Well, I think if you're looking trade, I do think it's Lilly or Abby. Those are the two stocks that really kind of stand out right here. And yeah, it did deal with some chop yesterday, but again, we were looking above the close on Friday's candle. That did occur here today. You can look at a continuation trigger above today's candle as well for additional confirmation. Lilly. And there was a little bit of debate in the scatter report meeting on Friday versus Lilly versus ABBV. Abby here. I think Coach Frank preferred Lilly, myself, and a couple others preferred Abby, but it was really close. There was a close debate there. But either one, these are the two best healthcare looking charts right now. Abby and Lilly both have continuation breakout scenarios. Both still look fairly decent, even after the volatility on Lilly yesterday. That got cleaned up on yesterday's intraday chart. Abby here, I just like the breakout on Friday. I like the breakout on Friday. I like getting above that resistance level. You do have 160 to navigate against, but that looks pretty decent. Has a legitimate opportunity to break through 160 here. And so those are the two charts that stand out. So my question to you, is, are you looking short term, i.e., let me get some healthcare love over the next week or two? Or are you looking a little bit, let me get some healthcare for the next 2 to 3 months? What's your time frame?
What kind of drugs you want to deal there? How long you want to be a drug dealer?
You know my style. If I'm going to be in it, I'm going to be in it for a minute. We gotta go on a couple of dates. So I don't want just a 1 week or 2 week thing. I want some commitment.
If you're looking for commitment, I think you stay away from Lilly and Abby here, because they look both like they're dating stocks right now, not something to get committed to. When you're looking at that commitment, I think you have the mentality more of Coach Mark here, where you're looking at areas of the market that have been oversold, that have decent valuations, that are coming into some pretty good support levels. And so I would probably shy away from the Lillies, the Abbeys to when you're looking at something a little bit longer term. There are some healthcare stocks, and specifically, we're not talking about this sector of healthcare, but we're specifically talking about drug manufacturers, pharmaceutical companies, because if I remember right, the Queen woke up today and says, Mama needs some drugs. In fact, that's what I think you said when we got on to the pre-production show. It wasn't even good morning, team.
No, it was like, where my drugs at? I need some drugs.
Mama needs some drugs. And if I didn't know Emily so well, I would be like, I'm concerned about you. But I did know Emily so well, and I knew exactly what she was talking about. I'm like, oh, you need that Johnson & Johnson Pfizer type drug. Okay, let's go.
Some of that.
And so if you are looking a little bit longer term, probably stay away from the breakouts here and look at something more from a reversal perspective. And I'm just going to pull up a couple charts here that are showing a little bit of reversal characteristics.
That's what I was going to say.
First and foremost, you do have some earnings, but if your hold period is a little bit longer term, you're going to hold through earnings and just be a little creative with your management around there. But yeah, on Johnson & Johnson here, you got a little bit of slowing momentum and trend that looks really good, especially on the backdrop of the consistency of this bearish downtrend. this is like a child could look at this chart and be like, oh yeah, it's slowing down, right? Oh yeah, look at that. Look at that pivot formation right there north of 150. Look at it getting back up above the moving averages. Look at the moving averages now. They were frowning. Now they're starting to give a little bit of a smirk here. That's rolling over a little bit. And so you're looking at a little bit of a reversal on Johnson and Johnson. Another couple charts here. And again, I'm going to look at a couple here. Johnson & Johnson, we're going to do the daily. We're going to look at the weekly here. On the weekly chart here, you would love it if it would have stopped here instead of here.
Yeah.
That would have looked a lot better because you would be working off that support level. Now you're working into a little bit of a no man's support level with a lot of chop. You got some overhead right around 157 to be concerned about on the Johnson & Johnson chart. So the daily chart looks really, really good on a reversal. It could certainly support any type of cash flow strategy, from naked puts to horizontal credits to diagonal credits to covered calls. It would support that. From if you're looking at it directionally here, Johnson & Johnson does have 157 to navigate against that 200 weekly. Now,
that chart supports every bullish cash flow strategy I can think of.
Right? It does. It does.
All of it. Right.
Okay. So. Now, Pfizer, second stock here. So Pfizer, same type of conversation. Got a real, not as consistent in Johnson & Johnson's downtrend, but a downtrend nonetheless. You can certainly see this slowing momentum here. You look at that as an increase in support level. You got a similar formation here. The difference is now you're getting above those moving averages. Let's see if we can find anything on the weekly chart. You're looking at the same situation on Pfizer. You're looking at Johnson & Johnson. I would think that the analysis favors Johnson & Johnson versus Pfizer in my estimation, but I could certainly understand somebody looking at Pfizer and having the same opinion that I have on Johnson & Johnson. I just think Johnson & Johnson is slightly better than Pfizer on that potential reversal. Let's move on. Let's talk about Bristol Myers here. Bristol Myers weekly chart is a little bit better because of where the foundation of support really kind of started at. You can see it kind of working into this old shelf over here. Let's come and look at the daily chart here. Daily chart here is more of a bear stop out reversal type scenario where you got back up above your moving averages here. Still fairly choppy. I do prefer just slightly the Johnson & Johnson chart over the Bristol Myers chart. And again, I'm just looking at a few stocks that are in some degree of reversal situation. Amgen, the next one here. And I like Amgen's rounding bottom here. It's got a little bit of a head and shoulders type feel. Look at the left shoulder, head, right shoulder. You can kind of draw that U-shape reversal that you're seeing here. You know, you got some old pivot analysis over here around that 230 level as well. You look at that weekly chart, and like we talked about with Johnson & Johnson, on the weekly chart saying, hey, we wish Johnson & Johnson would have held that 200-day moving average. Well, here's Amgen holding that 200-day moving average and has a lot of support between 226 and 220. There's a lot of support right there between that level. So if you're looking at it purely technically here, I think you got Johnson & Johnson a little bit. Yeah, but I think Amgen actually has the slightly better reversal situation than Johnson & Johnson. Now, when you're looking at this from a pure valuation perspective, and you certainly want to take into account a little bit of the valuation conversation when we're talking about a little bit of a long-term situation, both these stocks currently have, Amgen has the PE ratio right now at about 19. The forward PE ratio on Amgen is about 12. So the current PE ratio is 19. Based on what their forecast is, if their revenue numbers come in where they expect them to come in, that actually is right around a 12 PE ratio, which supports adding to the position or having a position there. When you're looking at Johnson & Johnson here, and again, just kind of looking at it from a pure valuation perspective as well, a little bit of a different conversation. You got 22 PE ratio versus 19 on Amgen. We're splitting hairs there, but it does favor Amgen. Forward PE ratio on Johnson & Johnson is 14 versus the 12 on Amgen. And so I would say AMGN is probably the better of the two in these drug manufacturers that we're looking at for potential reversal analysis. So I would favor AMGN on this from a position perspective. Again, pivot analysis, you would basically put a stop loss underneath 225 or 220, depending on how much room you wanted to give it. Johnson & Johnson would be very similar there. Out of the stocks we've looked at in the drug manufacturers that are specifically showing reversal characteristics, I would rank it at AMGN, then Johnson & Johnson, with the two others a little bit lagging. Mark, what are your thoughts for
I mean,
Coach
you
Nev
pretty
there?
much know. I don't have a lot to add. I mean, like, I think you want to look in this area. I mean, it once again fits the moment, right? I mean, there's going to be a flight to quality. I think that's already underway. Companies with amazing balance sheets, right? Lots of cash on hand, things that are insulated from recessionary dialogue. I mean, it just checks all the boxes, right? And I think you're getting a gift that the sell-off happened for the months leading into this environment, right? Because the sell-off happened in an environment where, hey, these stocks held in 2022, and hey, let's go to growth, sold off healthcare, and then all of a sudden the story changed, right? And price hasn't skyrocketed since the story changed. It's been very cooperative, which is nice for a change to have something be this cooperative. So Matt pretty much nailed it all. Just how do you tactically want to play it? I think if you go naked puts, you actually go a lot more aggressive than you would, because I think you're looking at ownership here. I think you're looking at let me have a play I can have. Let me have some healthcare plays I can cash flow for months, maybe the next year, right? The next year. So it's certainly an area I think that you want to increase exposure at. I think Matt's analysis is pretty good.